So this person, let me pull it up. This person commented, in the video, you mentioned that the trend after bar 33 will test the high point of bar 25. What is the reason? I've been confused about how these test points are determined, and I really want to know the principle so that I can find such test points next time. And that's a really great question, and it's really important to understand that. So I don't remember exactly what I said in the video, but I'm sure I can say something pretty similar. So this person is asking why I said the high of bar 25 would be a test target. We have let's say we have a rally and a possible bull flag, but it becomes an endless pullback and we get a bear breakout, 24. Bear breakout of a bull flag, it's a surprise. Now this might be exhaustion, 3 pushes down, probably going to pull back. We pause, we go a little further. Now 25, this is where it's important to understand implied pullbacks. And more importantly, the point of answering this question is to explain the market cycle. What happened on bar 24? Well, we know it's a bear breakout bar. So the market cycle, we have a breakout. What happened on bar 25? We rallied into the close of bar 24. We rallied on 25, sold off on 25. On a smaller time frame chart, even though it's not technical on this chart, this is a low one sell setup. Market sold off, pulled back, and resuming down. That pullback is important because this was the start of two-sided trading after the breakout. Trend bar, trading range bar, two-sided trading. This is the start of the channel phase. The pullback is always the start of the channel. So you have a breakout, pullback, start of the channel, and the market channels down. And we start to pull back. Now, channels evolve into trading ranges. That's the market cycle. Breakout, channel, trading range. You can see it here. Bar 6 and 7, bull breakout, the market pulled back and began channeling up. And the channel, it's not great. Let me find a better example. Here's a better example. Here's a bull breakout, 34 through 37. We rally. This is another implied pullback. So no bar traded below the prior bar's low until up here. So it's a micro channel. Technically, it's a spike. But if you count implied pullbacks, we have an inside bar, a bear bar. This is pulling back on a smaller time frame. This is the pullback, the start of the channel. Breakout, pullback, start of the channel. The market begins to channel up. Okay. You can see the spike in channel for the bulls. Bull spike and then a channel. Now, what's most likely, 75% of the time, bull channels break out to the downside and channels evolve into trading ranges. And the bottom of the trading range is typically the bottom of the pullback. So in this case, the test target would be the low of bar 38. So let's put a horizontal line at 38. Again, I know I'm repeating myself a lot, but repetition is key for learning anything. So if you struggle with this, even if you don't, it's good practice. Just kind of think through the market cycle and, find examples, mark up charts, whatever you want to do. So again, bull breakout, implied pullback, and then a channel. You can clearly see 3 pushes up. And channels evolve into trading ranges. So what happened? We start to go more sideways. We try to get an upside breakout, and we pull back. And then what happens? We test the low of bar 38. We find buyers, and the market is suddenly sideways. And if you look at this chart, and let's just say you can only see the bars from 38 to 55. You'd call that a trading range, right? Up to here, you might call it a bull trend, spiking channel, but here, it's a trading range. And the start of the channel became part of the trading range. And then we went sideways. So that's what I'm getting at with why I thought the hive bar 25 would be tested. It's the exact same idea, but in the opposite direction. Bear breakout, implied pullback, channel phase begins. We sell off for a couple more bars and then start to get a deep pullback. The 25 high was the start of the pullback, which means it's the start of the channel, and the high of the channel typically becomes, or the start of the channel typically becomes the high of the trading range. And then look what happened. Market enters a trading range, we go sideways, and it looks like we tested that one to the tick. 58.83 even. And this actually exceeded that by one tick. But anyway, you can see what happened. There were obviously sellers there. And then this needed a second leg down, and we got it. So I hope that answers the question. And I do plan on making a video on the market cycle, similar to the video I have for leg counting. I just haven't gotten around to it, but that is on my to-do list. So again, I hope that's helpful.